Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Welcome to ETMarkets CryptoMeet. Today we're going to try and understand what is Web 3.0 and how do crypto assets fit in. Over the recent weeks, we have all heard a lot of chatter about Web 3.0 and how it is the future of the internet. But what really is Web 3.0 and what does it mean for you and me? Now, before we bring in the experts today, let me give you a very brief and simple explainer on what is meant by Web 1, Web 2, and Web 3. Web 1 refers to the beginning of the internet and the information economy when companies created content and profited from it. In Web 2, we saw a lot of user-generated content where users like you and me also created content, but only a handful of companies really controlled the data of users across the world and hence they profited. Now, Web 3 is being seen as decentralized internet where users will have data privacy and data ownership. Well, to talk more about this, we have the experts in the house. We have Ashish Singhal, founder and CEO of CoinSwitch Kuber, and we have Pranav Sharma, founding partner at Woodstock Fund. Ashish and Pranav, thank you so much for joining for this really interesting masterclass today. Ashish, let me start by asking you if you can just break down in simple terms what really is Web 3.0 and why it has been touted as the future of the internet and how do crypto assets fit in?
Sure, Mugdha, and thanks for inviting me. So, Mugdha, just to take a step back, and although you did an amazing explanation of what Web, how it evolved, let me take a stab at it as well, right? Web 1 was about read only. Like you said, some people produce content, companies produce content, people were just reading those content. Web 2 become when people were able to contribute that content but didn't own it. Today, if we want to launch a business online, we have to rely on the likes of Amazon, Microsoft, Facebook of the world, and 70% of the new business revenue goes to them for setting up any new business online, right? What Web3 is trying to do is trying to create a network effect where all the users and participants get equal share of the profits of that network. Think of it like your mobile phone is sitting idle and you connect it to the internet. Now, somebody's website in somewhere in some other country can now run by using the computing power of your mobile phone. And you earn cryptos by connecting your phone to that network. So you get incentivized by someone else running their business. That business get incentivized because now they are able to launch their business online faster and better. So this is what Web 3.0 is, where you not just own what is out there, you also get incentivized and become part of the network, which is growing and ultimately benefiting every user and every business who is part of that ecosystem. And that's what we believe is the future of the internet itself, which we call it Internet 2.0 or Web 3.0.
Right. So I think you use very important terms there. Network effect really would play out in Web 3.0. Pranav, let me come to you and ask you about the underlying infrastructure for Web 3.0, and that will be the blockchain. Over the past decade or so, we have seen the Bitcoin blockchain, the Ethereum blockchain, etc. Do you see the rise of more blockchains and more tokens going ahead as we enter Web 3.0?
So thank you very much, first of all, for the opportunity, and sharing a dais with, let's say, this forum with Ashish is definitely a privilege here. And I think this is also a privilege to demystify this space. So just to answer this question, I'll take a step back and sort of look at it this way that what's happening within Web 3.0 that is becoming making it much more about inclusion expression on a massive scale, and why this space is going to be extremely valuable in times to come. So I think beyond what Ashish mentioned, I think this is also about a lot more about creating a very boundaryless and a borderless kind of a world. Which is also creating space for multiple applications to arise, and these are white spaces. Like Web 2 when we say Web 2 or Web 1, those spaces could not be addressed because of the fundamental architectural or let's say infrastructure challenges at the base of it. Now, if you look at, since you asked the question about what's the infrastructure and what do you see as blockchains, etc. What is blockchain is fundamentally embedded infrastructure for this inclusion and expression to happen on massive scale. Now, the question is that if you want those kind of applications which are scalable, infinitely scalable, for infinitely user-friendly and borderless, to emerge, you need those kind of infrastructure at the fundamental level to be in place. Now, right now, is scalability as an issue addressed from a network effect, to pan out from a consumer grade point of view in place? And the simple response to this is that no. The scalability has to be addressed massively. So definitely the blockchain right now, the whole, this can be famously called as, this is being called as scalability wars, which is going on right now between layer ones and the layer two, so that the most scalable and the institutional grade or consumer grade kind of a blockchain emerges. There's also a lot of effort which is going around in terms of various components to be in place for these blockchains to be usable for end user applications to emerge on top of this. So beyond scalability, the other factor is also the gas cost, which has been a bane in case of Ethereum largely. And that has also caused multiple variants of blockchains to emerge over a span of time. So gas cost and scalability are going to be two important factors for various innovations to happen over a span of time. So if your question is that, have we landed to a point wherein we can just say that this is the blockchain and these are the blockchains that would be successful? Answer is no, because we are still a little bit far from scalability and gas cost issue to be addressed.
Absolutely. I think you underscored some of the big challenges right now for Web 3.0, the scalability issue. Ashish, let me bring that question to you as well. Will block space become a scarce resource? And what is the solution then? Of course, he talked about, Pranav talked about layer one, layer two. There's also the concept of sharding that's really picking up, where you're essentially partitioning the blockchain. How will this issue be addressed going forward?
Sure. So definitely, block space is going to be one of the critical resources as we go into the Web 3.0. And there are many solutions out there, sharding among them, where basically we compartmentalize the workload into smaller partitions and help scale the blockchain. But I don't believe sharding would be the only solution. There are many other layer 2 blockchains doing many different things to scale blockchains, and sharding would be one of those methods. Sidechain, even what Polygon has done scaling Ethereum has been amazing, and be it Lightning Network, be it sharding, there would be many more solutions which would come in and bridge this gap from where we are today, where it's not scalable to the level of millions and billions of people, to the level where probably the metaverse or billions of people online would be handled by the blockchain itself.
Absolutely. I think you, of course, brought up the topic that everyone's talking about, metaverse, but we'll come to that in just a bit, because we're talking about the challenges, scaling, etc. Pranav, could this also lead to a lot of business opportunities? We're seeing a lot of businesses on the layer 2 side of Web 3.0 really emerging and getting a lot of funding as well. What are the business opportunities right now under Web 3.0? And also when it comes to crypto assets, what are some crypto assets that you see will really work well under Web 3.0?
So I think there are like three questions, sort of morphed into one single question, Mugdha. So here, let me first answer your first question is that, so my view is that layer 2s are going to be very valuable because Ethereum legacy issues are not going to be solved anytime soon. And the kind of tooling that Ethereum has, it is fairly advanced. Let's say, I'm just putting it out and maybe my neck will be online in terms of putting this out. But on a scale of 1 to 10, if let's say Ethereum scaling, let's say tooling is 10, then the other chains, the tooling would be, let's say 2, 3, if I can emerge under probably 4, right? So there is definitely, the developers would have a much bigger ecosystem when they start participating through Ethereum as a route. Other chains like Solana, Near, etc. are, really contesting a lot. But that creates a wedge and a space for layer 2s like Polygon to rise. And Polygon has been able to build a very large ecosystem, fundamentally because people want to build on Ethereum and they want a scaling solution which is working with Ethereum right now. So this is the current state of affairs. Now the question is that, now the next question that you asked is that, will the current state of affairs, continue to be in the future. In the future, one thing that we see as a fund is a multi-chain world. So it's not going to be one chain rule at all. It's going to be an amalgamation of multiple chains, making different design choices, and eventually landing up, solving for different problems and becoming specialist in many ways. A chain could be focused on microtransactions, other could be on enterprise solutions, third could be on privacy-related transactions, fourth could be completely on scaling and helping web 2 applications to migrate to Web3 as a bridge. So now that brings me to the third part of the question that you asked, is that what is the mega opportunity, the massive opportunity that you see? So let's assume a world in which scalability and gas cost as an issues are resolved. So our thesis is very simple, that once the technology piece is consumer grade, then the action will shift to the middleware. We already see a lot of middleware getting a lot of traction, becoming extremely valuable. But eventually the holy grail is the application layer, where the white spaces of applications that as a humanity, we never thought we could solve for these problems, or spaces which can be more efficiently solved, which we always thought that they have to be solved through legacy-driven systems, would be the ones that would experience disruption. And that's when the mega unicorns or the real mega unicorns would emerge.
I think that was some really informative, that lot of information, what you just said, Pranav. You talked about a lot of business opportunities then. Ashish, let me ask you then, what will the new business models look like? What will company building be like under Web 3.0 versus what we have seen so far? And I also ask you this because, Ashish, you were also, part of a recent Twitter Spaces, which had a lot of global players also on Web3. And, one point that was discussed was whether should there be focus on product building and company building or on the tokens and the price of the tokens. What do you think is the correct way to go? And what do you think business models will emerge? What kind of business models will emerge under Web3?
Sure, Mugdha. So let's look at Web 2.0, right? Anything that you want to build here, you first, build a product, roll it out to a set of users who adopt your product, give you feedback, then you improve upon it. And if you continually improve, you become, a massive company, solving for the use cases of millions of users, right? In Web 3.0, what can be done is slightly different. Now, your users don't just become using your product as users, but also become participant in your ecosystem. So they get incentivized by giving you the right feedback and growing the community and the product itself. So when anyone is building a product on Web 3.0, they're not just building as a company, but as a community. And the amount of feedback, amount of participation that you receive from your initial or even long-term users is immense. So the kind of opportunities that exist, or the kind of business models that would exist on Web 3.0 could be very drastically different and could really evolve to not just hundreds of billions, probably trillions of dollars worth of companies being built on blockchain. Whether one should focus on the token price or is the product should take the preference. I am an old school guy. For me, product always takes the first approach. If you're not building, which is solving for something, ultimately that community itself would fall apart. A lot of founders I've seen focus on launching a Web 3.0 company, but not focusing on product, but focusing on the price of their token. How do they incentivize their users? And users also get participate in that ecosystem because they're earning immediately something, right? So instead of that, I think a balanced approach where you do a little bit of locking on your token prices. When the community builds, they don't have instant incentivization, but have a long-term association with the project. So they give you the right feedback, which builds your product, which ultimately improves your community around. So there are a few nuances around it. And I think hopefully over time, different entrepreneurs would explore much more opportunities that are present in Web 3.0.
Okay, so balanced approach is what you would recommend when it comes to product building and the price of the tokens and so on.
Yes.
Ashish, let me just stick to that same Twitter Spaces because there was so much content there. Of course, the topic of that Twitter Spaces was, is India really ready for Web 3.0 and what are Indian entrepreneurs building under Web 3.0? And of course, there's always this comparison whether India will once again, copy a lot of what is being built in the West, like we have seen in Web 1, Web 2, or will Indian entrepreneurs be able to build something different and something new under Web 3.0?
So I fundamentally believe that the Internet 1.0, where Google, Microsoft, Amazon kind of build the amazing value. India at that point didn't have the opportunity, didn't had the education or the skill set to compete with those likes, right? And those companies became so big, obviously solving for a real world use case, but become dominant, not just in their countries, but around the world. I think with Web 3.0, we are getting another chance or another stab to take at the internet itself. And we believe that we have the manpower, we have the community, we have the skill set to really contribute, not just building in India, but building for the global world. We definitely believe the next Google, Facebook, Microsoft could come from India, dominating the world and maybe built on blockchain. Today, India has over 12,000 blockchain developers, 4 million plus strong developer community in general. So there is no, lack of skill that lies in India. I think with the right investments, right regulatory investments into the space could really boost, the Web 3.0 coming from India and, dominating the entire world itself.
Well, you touched upon the regulatory aspect, and we will come to that because, of course, that is very important. But Pranav, I have the same question to you, whether India is ready for Web 3.0. And I want to ask you, what should India do in terms of upskilling when it comes to building for Web 3.0?
No, I think this is a great question here. So let's look at, let me see if I cannot repeat, what Ashish just mentioned, because he spoke about this very beautifully. So let's look at, what is the biggest advantage India has? Of course, check the boxes that Ashish mentioned about Web3, which is large English-speaking developer base, which is growing actively, and which is also growing not only on the side of Java, etc., but also on mobility and a bunch of other things. But the other aspect is also the traditional, you can say check the boxes for Web 2.0, which is, let's say, demographic dividend. We have a large consumer market. We also have a very strong rails of UPI and then optical fiber network, cheapest data, which is available to us. So all of this combined is a massive, massive opportunity. Now let's look at what we don't have. So let's say when I go to US, so we also have a fund in US. When I go to US, I see tremendous research and innovation capacity and capability in institutions and in people and even in culture as well to fundamentally solve for very complex problems, right? Which could be complex problems ranging from longevity to even complex, problems or mathematical problems. If you look at blockchain, it's a mathematical problem, various things. And so various innovations are actually coming from the West, which is US. The second thing which is available in US aplenty is risk capital. And so I'm not saying from any other point of view, but let's say when you speak with family offices or industrialists in India, you experience validation, they seek validation from the West, from US. So it's not the most leading capital which is out here. So this is also a massive opportunity from India point of view. If we can find a way, so I'm answering the second part of your question from upskilling question that you asked. If you are able to create mechanism and institutions for solving these two problems, in terms of creating infrastructure, which is basically incentivizing our top engineering colleges, for example, or creating mechanisms for government to support various institutions for solving complex problems, right? It can be phenomenal. The second part is, of course, encouraging risk capital. So let's say if there are restrictions around LRS, how can the most qualified investors participate a lot more by supporting these technologies? So I'm not advocating specifically for blockchain here, but I'm saying that why not other emerging technologies? And let me share why I say this is that if Web 3.0 is supposed to be a democratic space for the humanity to find expression, and if let's say most of the capital is going to come from the West, then where will India see identity in terms of solving of complex problems and also finding a space where India can have risk capital being associated with it and sort of also benefit from early gains that come in participating in these networks. So these are the two gaps I see, and massive amount of upskilling and policy support is required for this.
Absolutely. I think policy support will play a very crucial role when it comes to these new emerging technologies. So Ashish, what role should regulation play in ensuring that India doesn't fall behind, when it comes to Web 3.0 and the crypto assets that will be part of Web 3.0?
Sure, Mukta. So any new technological revolution, right? Regulations has to follow that. It can't lead it because the innovation is just happening, right? And that is what exactly is happening in this space. The pace of innovation is changing every day. It's expanding every day. Every day we are getting introduced to new and new things on the blockchain, be it NFTs, Metaverse, staking, and many different concepts altogether. So what we need to do as regulators, and what regulators need to do in this space, is to create an environment which is promoting innovation in itself, right? Definitely making sure that the users are protected in this space, making sure that people who are buying into these asset classes, making sure that they are well educated, well informed while making those decisions, but also creating clarity in the space for innovators. Users, innovators, and the government need to work hand in hand to create an environment which is budding, which is promoting the new technology itself, so that entrepreneurs of today's India do not go outside and register their companies outside, and actually build in India, for India, and kind of for the entire global world itself, right? So I think these regulations would play a pivotal role in defining what role India would play in Web 3.0. We have always said that India missed out on Internet 1.0, but definitely should not miss out on Internet 2.0, which is just getting built up on the blockchain and the crypto asset class as an ecosystem.
Absolutely. I think definitely friendlier regulations while keeping the safety of users in mind is important. Pranav, do you also want to jump in here and talk about what regulation should look like, especially like Ashish mentioned, the problem is of a lot of companies, entrepreneurs moving outside to build these technologies and set up their companies. How do we ensure that we're not losing a lot of these companies and technologies to other countries?
No, I think Mugdha, we need to take a step back and see that what needs to be regulated actually. So, and what are the apprehensions that from where regulator is coming from. So fundamentally, globally, the regulators are essentially looking at three things. One is that it should not be, there has to be a way for money laundering and those kind of things not to happen. So there are a bunch of regulations. So things have happened, things have evolved to a point wherein FATF guidelines are out there, KYC, AML checks, exchanges, etc., have reached a certain tipping point. So I think that issue is more or less addressed. And even if there are certain things we need to be addressed, they will be addressed over a span of time. The second part, which I think the regulators, definitely seek is a lot more clarity on how these systems would protect the consumers at play. So let's say if right now 2% or 3% of the humanity is on these systems, they should not create a space wherein the consumers who are discerning investors are not protected. But consumer protection can be done because if there are affirmative regulations, definitely ombudsman and bunch of other mechanisms, court of law, etc., would be put into place. Definitely a problem which is easy to solve once the regulations are in place. And the third problem that worries regulators is the unknown of the systemic risk. That what if, let's say, this becomes a dominant currency, or let's say these currencies or the space increases to a certain level, such a level that eventually lands up derailing the whole system. And I think this is a fear of the unknown. And as long as it is 5%, 10% of the total play, I don't think it should be a cause of concern. And I just want to put it out by saying that a virtual currency, even if it sounds like a currency, it cannot ever replace a sovereign currency. So so that concern is in many ways unfounded. Now the next part of the question is that how do you address these issues which I briefly mentioned, but what are the kind of proactive mechanisms regulator can put into place? I believe putting a sandbox environment into place is very, very important, because it creates a space for the best of the actors, as in best of the startups and best of the builders, to sort of participate in a meaningful way and have and be under significant surveillance, so that the systems, processes are institutional grade, wherein they can actually start exporting and including various other consumers of Web 3.0, which could be outside India as well. The second is a licensing regime, which can really help to put some basic hygiene in place, so that to whatever extent possible, things are aligned with the existing frameworks. I'm not saying copy paste of capital market regulations, but existing frameworks and mechanisms of capital market regulations, so that as an asset class, there's a lot of fungibility of these assets can be experienced within the sovereign boundaries and outside the boundaries as well over a span of time.
Again, some very brilliant points. And I think a sandbox would really be a good first step to ensure that the regulators and the entrepreneurs, work together on this. Pranav, you had talked about risk capital earlier, and how risk capital is really chasing a lot of these new technologies. I want to ask you now that we are seeing liquidity kind of dry up, a lot of global political tensions, etc. Do you think that there is still going to be a lot of risk capital towards building, these blocks of Web 3.0, or do you think there could be some challenges in the current scenario?
Yeah, so Mugdha, all I will say is, since this is the time of Mahashivratri, I'll possibly call this as Manthan, which is going on right now. Where, let's say, we see a lot of churn happening. So for people who don't understand what Manthan is, it's essentially the churn, wherein we see that definitely it is creating a space wherein liquidity, which was, I would say, magnified liquidity or multiplied liquidity, which is through derivatives and various other speculative instruments, it is getting dried down. And I think this, as the speculative liquidity moves out, the serious money stays back. And my perspective here to investors, would be that if, as an investor, you landed up speculating, then this is a great time for soul searching. And if, as a speculator, you were not investing, then this is also a great time for soul searching and seeing that how you can see evolution which is happening in this space. And especially in this session and the conversation that happened so far must have given you a glimpse that there are a lot of serious talent which is involved in this space. There's a lot of true innovation which is happening. And this is only going to grow over a span of time. This is just the beginning in many ways at any point in time if you look at. Now, if you're in any way, if you're looking at, as from an investment perspective, the right time to invest is when people are fearful. And this is the time when you should be investing and looking at this. Now, the question is that how much should you be investing? Definitely based upon your risk appetite. And on a national television, can we give you where you should be investing? Answer is definitely no. So please look at how much you are willing to invest into something like this. But always remember that emerging technologies can give you uncorrelated and you can say extremely astronomical or exponential returns.
Okay, so you're actually saying this could be a good time to invest in these technologies. Ashish, I want to ask you about this. May not really be a challenge, but there are a lot of critics of this concept of Web 3.0, right? And these critics are big names like Elon Musk and Jack Dorsey, etc., who are saying that Web 3 is really nothing but a marketing tactic, or it's just a repackaged version of what we've seen so far. Firstly, your response to that, and what really will be the road ahead when it comes to Web3, and do you see a lot of these critics kind of understanding the nuances that we have already discussed so far?
Sure, Mugdha. And just to answer that both together is that this space is evolving every single day, right? What is happening today, a lot of it is FUD, a lot of it is actual development as well. And as Pranav also mentioned that since the liquidity is drying up, you would see better business models emerging and being the winners in this market, and which would shape this industry itself. It's very new. So it's anyone guess where it goes from here. We are definitely the believers and are building in Web 3.0, but we definitely address the issues that Elon Musk or say Jack Dorsey points out as well, and we kind of shares a part of that opinion as well. So it's only time will tell how this entire tech would evolve, how better models where you don't have to rely on a VC to build an amazing business, but actually with the power of your users itself, who are your early investors, can change the game altogether. And you don't have to rely on risk capital anymore. Your users become your proponents and take your business from where it is today to where you want to build if you're solving the right problem for your users, right? And your users becomes partners of your business itself and grow that business altogether. So it's a very, very fast evolving space. A lot of naysayers, but we definitely believe in this technology, and over time either we would be proven wrong or they would learn and accept this as the new revolution itself. And my hope is that we ultimately help prove that this is the new internet in the making.
Absolutely. Yeah, of course there are naysayers, but there seems to be some very interesting things happening, like you said, every day. Let's now come to the interesting topic of Metaverse. And, at the beginning, I said there's been a lot of chatter about Web 3.0. There's equally been a lot of talk about Metaverse, NFTs, etc., especially since, Facebook also said it's investing billions of dollars in Metaverse, etc. Ashish, why don't you maybe just clarify what Metaverse is exactly for the viewers as well, because there seems to be some confusion whether Web3, Metaverse, etc., are the same thing, or are they different things, but the future of the internet?
Sure. So Web3, I would say, is a base layer, and Metaverse is a use case in which we are trying to, or the companies are trying to form a virtual reality in itself. COVID has proven that earlier the meetings which we thought has to be face to face, now we do online and we just work fine, right? So the idea is, can we create a reality which where your schools could be on the metaverse, on the virtual reality itself, your ownership. Say you're buying a jacket of from the high street, you buy it online in a digital metaverse, join your friends in a game wearing that, trade that jacket in game, and the possibilities are endless, right? So seamless transfer of digital assets across virtual spaces is what metaverse is all about. It's a different reality. If you have seen Ready Player One, it is that kind of reality which is in the making, where Microsoft, Facebook, and many other companies are investing billions of dollars. We have seen Axie Infinity, play to earn games, which are new concepts which are emerging, which kind of boost more of the virtual reality application, the metaverse building itself, and a lot of even blockchains supporting that kind of infrastructures, which is how do you own digital asset, how do you transfer digital assets, becoming easily accessible, and using those digital assets across your different virtual reality applications, be it a game, be it say virtual land, or anything of that sort.
Absolutely. There could be a lot of gaming, a new kind of gaming that we're going to see. It'll be a whole new virtual and augmented environment. What will be the role of cryptos in the metaverse, Ashish?
So the role of the crypto is the ownership. It's the digital assets which are getting built on this virtual reality. Today, say if you own a painting, right? You have that painting physically available. It's one of a kind. You can prove it to anyone. In a virtual sense, it now can be copied. Same painting can be with hundreds and millions of people by just copying the code itself. What crypto and blockchain does is create immutability, right? So non-fungible tokens become the base layer of owning anything in the metaverse, proving anything in the metaverse, and that becomes your identity itself. Today, if I own a lot of NFTs in my, say, CoinSwitch wallet, tomorrow I can go to the Facebook metaverse and still own those, use those in that metaverse itself. So it's creating an identity card for you, basically, where you own and prove your ownership digitally across the entire digital plane itself.
Okay, so it's about the ownership in the virtual world. Pranav, we talked a lot about how a lot of capital is flowing towards Web3. We've seen a lot of companies say that they're going to invest a lot in the metaverse. In fact, recently Infosys announced the Metaverse Foundry to fast track enterprises' exploration of the metaverse, is what they're saying. As somebody who runs a fund, what are the new trends you're seeing when it comes to investments, capital flowing into this new future of the internet, which is a metaverse?
So I think, so Mugdha, here, there's a massive amount of convergence which is happening right now. And as Ashish was mentioning, that fundamentally what we call it as Web3 is embedded tooling, which is necessary for the immersive consumer grade applications to emerge over a span of time. And we call it metaverse. Some people call it multiverse, because for all of us, there's a different reality that we live in. And we want to experience it differently and probably in a much more enhanced way when we participate in the virtual world. So definitely there's a massive play for organized organizations like Infosys on one side and Apple and Google on the other side to massively participate, because they have been on the forefront of seeing the evolution of technology over a span of time. And if this is about convergence, then blockchain, AI, ML, IoT, and even hardware, which can actually help you experience this immersive reality to evolve to a certain point. Now, the thing is that what a certain community could or certain country could experience, let's say in terms of nuts and bolts, for example, if semiconductor chip was manufactured, became a standard, over a span of time. But the point is that, let's say your reality is different from my reality. So the point is that I want to experience it, through gadgets, through mechanisms, through interfaces that make more sense to me. Maybe something in India would require more vernacular bias in many ways, may require something there are certain communities which are more visualizing. There are certain countries which are more academic and so on and so forth. So this creates a massive opportunity for innovation and user experience to be built around these converging technology. And so that seems to be the play in which everyone is looking at. Now, as a fund, this is a very big canvas, right? So right now, what we are looking at is that the fundamental technology and the tooling which is necessary for a metaverse to succeed is where we are focusing a lot more on. Right now, if you look at gaming, of course, with Axie Infinity, Play to Earn became very famous. But how many games with Play to Earn have actually become successful? And this has been massive amount of capital which has flown into the category because of that. As per our visualization, we see that NFTs as a stepping stone into the metaverse. It's almost like the key which is necessary to open the lock to the metaverse, and that's how we're seeing, various, I would say, NFT platforms and various tools which are necessary to price NFTs, to authenticate them, and also the gaming place and the services place that Ashish were touching upon. Probably there would be like JP Morgan started having a metaverse bank, but there could be a real bank that could be only on metaverse over a span of time. Payment gateways, commerce from commerce standpoint, various currencies which are locally there, land, decentral land. So there are so many moving parts which are there, and essentially right now we are focusing a lot more on the tooling side. But eventually we have to graduate towards the user experience and on the application layer.
It sounds very exciting, definitely. And, Pranav, you talked about NFTs. So before we wrap up, let's, try to demystify NFTs as well. Ashish, if you can help us in that, because there's a lot of talk about these non-fungible tokens, a lot of celebrities coming out with NFTs. And like Pranav described, it could be the stepping stones for the metaverse. So if you can just highlight what NFTs really are and their role in the metaverse.
So say if you're given a driving license, right? Earlier, the use case was that you would be stopped by a policeman on the road to ask for your, a driving license, and you would show it to him and go on with your route, right? In a digital world, NFT is basically a digital copy of that license itself. Anything that you own, you can prove the identity digitally. And that is where NFT play a part. It's non-fungible token, which is not replicable. So if you own something, then you can prove the ownership. Pranav said it's like a key, right? And if you say own a land, you can prove the ownership digitally, seamlessly across the metaverse or across any application for that matters. So NFTs are basically, the digital signed, non-replicable entities which you can invest, buy, and sell in, right? So these are the digital fundamental blocks of the digital ecosystem of Web 3.0, which is building. Okay. And obviously these play a big part in Metaverse, because Metaverse is only about digitization.
Absolutely.
So in that digital world, what do you own, what do you not own is defined by the NFT itself.
Absolutely. I think very well explained. So before we wrap, just want to ask you, it all sounds exciting. Ashish, for you, what are those one or two really exciting applications or any other aspects of the metaverse that you're looking forward to that you think will really define the future of the internet?
Just metaverse or Web 3.0 in general?
Web 3.0. Let's keep it broader.
Sure,
Web 3.0.
Sure. So I think I am really excited about the financial inclusion in itself, and that's what CoinSwitch is trying to build itself, right? Crypto and blockchain would play a pivotal role into creating transparency across all financial domain, non-financial as well. But we see, even say land registry ownership to be moved to blockchain, and anyone who wants to become part of the digital economy can do that through blockchain and cryptos. A farmer in a remote village in India can now sell anything online, connecting with this digital world, and doesn't need a physical location or a bank branch in its area to be part of that economy itself, right? So for us, changing the way, bringing transparency and adoption throughout India is what blockchain and crypto can help in, and that's what we are most excited about.
That's absolutely important. I think inclusion, financial inclusion will be a very important aspect. Pranav, anything that you want to add that you're excited about when it comes to Web3, Metaverse, etc.?
So here, our macro thesis is we are looking at potentially three mega trends which are going to be disruptive in the future. And definitely Web3 is the underlying around this. So first is convergence. convergence of technologies, convergence of cultures, let's say Zoom calls, etc., us doing multiple transactions, practically on telegrams or on, Zoom calls, etc. So all of these things are happening because there is certain stereotyping which has demolished, right? Convergence of technologies, emerging technologies, traditional technologies, convergence of liquidity. There's so much of liquidity which is flowing around, and this liquidity is moving from not only liquid assets within liquid assets, but also from liquid assets to non-liquid assets. And that brings me to the second part, which is financialization. So that is also leading to massive financialization of practically every asset. Now, when you talk about even NFTs, there was a point in time when art was actually based upon a collector's pricing, but now it is an open market. So there is a way to discover price on a massive retail play because of NFT, and a bunch of other things which are also happening around tokenization of real estate, tokenization of bonds, tokenization of. So the market is not attracting enough liquidity, but our thesis is that once the regulations firm up, tokenization as a play would also attract a lot of liquidity. So DeFi, tokenization, NFT, etc. That's financialization as a space. So by financialization, that means that the endpoint is that we want to literally reach at a point wherein literally at will we can unlock a value or sort of transfer a value. The third part is virtualization, and we spoke a lot about Metaverse, etc., which is about immersive experience, wherein the virtual world is experienced as more real than the real world itself, and that's where we are getting there. So now, as a fund, we are interested in any founder which is building around this thesis, but fundamentally at this stage, focused on blockchain as fundamental rails, and that to public blockchains. And we believe in a multi-chain world. So in that sense, we're excited about infrastructure, both hardware and software infrastructure, DeFi, tokenization, both fungible and non-fungible tokenization, and Web 3.2 protocols, which are the middleware, which are necessary for building this forward. And we are looking at this as a global play, but we have special love for India, is all I can put out. And we believe that for the reasons that we discussed earlier, that India is going to be explosive in times to come in this space. And we want to play a pioneering role in that.
Ashish was smiling when you said your special love for India. I'm sure all the Indian entrepreneurs will be happy. So you talked about convergence, tokenization, and virtualization. That will be the key trends to watch out for that you're excited about. Some really interesting points. Thank you so much, Ashish and Pranav, for discussing Web 3.0 and demystifying it for us. And thank you, everyone, for tuning in to ETMarkets CryptoMeet. Thank you.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.